morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, June 15th. It's all about the Fed today, interest rate decision, and it's going to be interesting to see how the market participants react to what the Fed does. Now, Fed fund futures have been saying that there's going to be no rate decision in June. More than likely, it will be in July. Again, we all talked about the Fed is painted themselves in a corner. And I'm really interested to see how it looks, how the markets are going to react actually today. The Fed is not likely to raise rates. So do they sell the news? So we had 4 days of weakness, so I'm not sure how that's going to react. Or if they do raise, that's going to be a big shocker today because nobody's expecting the Fed to raise rates. Market will definitely sell off on that. Well, at least the knee-jerk reaction will be, I should say, let me rephrase that, sell off on that news of a rate hike. But I don't suspect that that's going to happen. But we need to be very careful because there's going to be extreme volatility both ways, up and or down. So that's why a lot of people, traders, don't like to trade Fed Day. I'm one of them in that camp. I like to step aside and see how the volatility reacts and then jump in afterwards after the volatility has at least diminished a little bit. Speaking of volatility, let's jump right into it. We had 4 days of selling. We had a nice short covering rally at the end of the day, and we actually had a little bit of follow through today, plus 450. Would not surprise me. Why? Well, because VIX is a little bit overextended. Every time you get out of that Bollinger Band, you notice, right? We get that candle, and then sure enough, we roll down. But this is something a little different. We had a nice big explosion out, and I mentioned to you guys, remember I said, guys, commitment to trader reports, extremely, extremely short are the speculators, which in the report are kind of dumb money. But they're good when you follow an early trend like this. They would be short. They're going to stay short. And the speculators, the commercials, the producers that need the VIX to run their business are extremely long. So that to me said down here at 12 and a half, be careful. And sure enough, we got that explosion. So that's really it was a great call, good technical analysis. So I would suspect that we would come back into the band somewhere, maybe 16, 15. I don't see 12 and a half. The 20 within the Bollinger Band comes in about $15. So even if we came, we went down 2 days, or if the volatility is upon us and continues to remain elevated, this is going to stay within here, right up in the upper end of the range here. And then if it bases 3 or 4 days, and then I would suspect another big move. I will tell you off the technical analysis overview. We've mentioned I look into the weekly charts. We have head and shoulders patterns all over the place on all of the indices. And I do suspect that there's something bigger brewing to a bigger downside move this summer. I was expecting something to happen more like sometime early June after earnings season, but that actually changed, and we had 9 days of just moving higher on no volume. And then sure enough, what happened? 4 days down, we took back all of the 9 or 11 days of being up. So you could see that risk off happens extremely fast and it moves rather quickly, so you need to be aware of that, okay? Now let's take a look at some of the other stuff. McClellan oscillator, still not reading an oversold state as of yet. 80, 90, way down here. If the market were to go down here, meaning the McClellan oscillator, I would be looking to buy the market the next day. But at the moment, it's not. We're only at 55. Plenty of room still to run to the downside, okay? That doesn't mean it's going to happen today. All I'm saying is that there's going to be extreme volatility, so you need to be aware of that today. I'm going to basically take a neutral stance today, and if there's a trade or two that we can look at early, I would look into it. If it meets your parameters, that's great. But right around 11 o'clock-ish or so, going into lunch, step aside, wait till the Fed comes out. And even then, if you want to trade Fed announcement, I'd give it at least a half hour, 40 minutes before you jump into a trade. Most likely, and most of the time, on the announcement, the knee-jerk reaction is always the wrong move. So it's a little tricky. So if you're not seasoned trader, then I would just definitely step aside for a little bit. All right, I want to show you the NYUD. I've been showing this to you for the last couple of weeks, saying that we have negative divergence. Sure enough, now we're below zero. Okay, now the more you stay below zero, right? The more you stay below zero, what happens is that it's telling you that we are weak. The internals are weak. This is telling us that we had negative divergence. Now below zero, and it's just one shot from yesterday. But if you looked at something like here, where we were below zero on all of this move, this is one of the most reliable reading of breadth of the market. You could see, bam, we had that big sell-off. Okay, so very good indicator, and of course I will bring this to you on a regular basis. VXX, If you guys wanted to trade that, I mentioned that to you too. You could see a little extended. There's no question about it. So when the VIX is extended, it creates a little bit of buying into equities. All right, let's take a look at the spiders. Now I mentioned I'm going to take the head and shoulders off. We did break above it, but we did it really ever so slightly. We had 1 or 2 day close above it, and we miserably failed and broke back down again. So I'm going to leave it for now. You could go either way. You could take it off if you like. You could even call this as a double top, and here's your neckline here. So it's pretty close to the neckline of the head and shoulders pattern. So, but you could see here we're starting to roll over now. We had a couple of big distribution days, plenty of room to run before indicators become oversold. Okay, 60-minute. This was the negative divergence picture that I showed you. This big area here, 204, 204, 205 in the spiders is going to be pretty important. All right, Bollinger Band's moving lower. You could see that price is moving lower. And look what happens. See, and this is what happens when you're a day trader that you have to deal with. You get the gap down, and what happens? You basically stay like that, pretty much like this, pretty much most of the day, at least on the 60-minute. Now, obviously, you get into a smaller time frame, you can probably grab a trade or two there. But once it gets gaps down, the high probability trade is really over. All right, Diamonds Daily, you can see here now back on the 50, barely clinging to the 50 with a doji candle. So we'll see if that doji builds on a small upside move, and that would give us a good objective shorting opportunity. IWM, same thing here. We had a little bit of horizontal support, broke below it. And remember, guys, we had this big 9-day rip. There's nothing good about the Russell 2000. And I mean it as far as technical analysis is. You could see tons of supply, and sure enough, we rolled into it, didn't even get above it, but then we failed miserably. All of this is algorithmic trading that's going on here and pushing everything up higher, covering the shorts and stuff like that. This is not a good. If you look at this chart overall, if you think this is healthy, it's not. So head and shoulders also on the IWM, and it didn't even make the a head test on the IWM. So just something to keep an eye out. Again, Q's daily, you could see here. This is a good formation. It does look like a double top here to me, and I have no problem, calling it a double top. You could see here just slightly lower, building that right side, and then come into here, 104 and a half, 105. For a downside break. I like to see this thing a little bit more, create that right side before anything. But you could see here, guys, the Qs not healthy at all. Although Amazon, one of the big leaders in here, did very, very well, holding up during the small 3-4 day little sell-off. So Fed is going to happen. Let's see what happens today. If they don't raise rates, I do believe that's pretty much factored in. Do they sell or do they buy the market? That's going to be the unknown. If they raise rates, it's going to be a big shock. The market's definitely going to go down. We got Brexit vote next week, I believe on the 23rd. That's going to be a big decision. I don't believe that they would exit the euro. I think it would create worldwide havoc in our equity markets, and I just don't believe that. The central banks and the Fed have invested trillions of dollars to keep this market elevated. And it just looks like that there's something bigger brewing, and I do believe that the Fed's pretty much out of bullets. So there's other ways I'm sure that they can do, but negative interest rates and this and that. But just got to be careful out there, guys. There's something brewing here, and I wish I could tell you what it is. But charts are saying that we got some major bearish patterns on weeklies, head and shoulders patterns that are ready to get triggered. So we'll see what happens. A couple of days up doesn't mean anything. So just remember that. Don't get fooled. Don't listen to the pundits. Do your own technical analysis, all right? Make sure it lines up with what you're looking to do. Have a great day, guys. We'll talk to you tomorrow. Take care.